A number of DISA Master users have inquired how and where to enter the California pass-through entity tax in Xbouse. In this example, I will show you how I would approach the question. The first thing to remember is that under the family code, child support is calculated on unadjusted guideline net incomes. These are the incomes prior to any adjustments to income resulting from payment or receipt of spousal support. So the PTE tax and tax credit are part of the party's income before spousal support is paid. In ex-spouse, that means that we need to exclude spousal support from our initial calculations to arrive at the correct unadjusted guideline net for child support. We do this by switching the guideline deductible support to exclude in the settings screen. I will illustrate the steps to take with an example. Let us assume that an individual X's share of allocated profits from a California business that qualifies for and elects to pay the PTE tax is $100,000. On the federal K-1, X's reported income is $90,700, which is the $100,000 less the 9.3% PTE tax. First, change the display to annual. Apart from the fact that we're dealing with annual income figures in this, it is advisable to use annual settings whenever doing anything related to tax calculations, as these are calculated on an annual basis. If we used monthly inputs, we potentially introduce rounding errors. To enter this data in Xbouse, we enter $90,700 under other taxable income. In this example, I will enter it as royalty income, though it could be entered simply as other taxable income. While in the detail window for other taxable income, I draw your attention to the bottom two rows where there are inputs for subtractions and additions to state AGI. Use these fields when there is non-conformance between federal and state tax codes that are not already automatically adjusted for, such as with spousal support. For the PTE tax calculation, we need to add the $9,300 paid at the entity level to the state AGI in order to return the state AGI to $100,000. If we now open FTB Form 540, we see that the federal AGI as $90,700 and the California adjustments as an addition of $9,300 and the state AGI set to $100,000 as we require. Remember that the PTE tax credit is a non-refundable credit, meaning that we can't have the credit exceed the state income tax due. To see what the state income tax is for the father, we toggle the right-hand side screen display to show state income tax, which we see in this example is $5,190. This is the maximum amount of the credit that we can take in this financial year, with the remainder of the $9,300 of $4,110 being carried forward to the next financial year. We enter the PTE tax credit of $5,190 as other non-taxable income. The effect of the PTE tax credit is reflected in the unadjusted guideline net income, which has increased by this amount when we apply the tax credit. We now reset the display to monthly figures to make it easier to see what happens next. The monthly unadjusted guideline net for father is $6,575 and the child support is $1,578. We can now reset the program to include spousal support. At this point, we have accurately calculated the effect of the PTE tax credit on unadjusted guideline nets for calculating child support and unadjusted spousal support. The unadjusted spousal support amount per month is $1,841. However, you will note that the state income tax due has changed with the inclusion of spousal support. At this point, you need to decide whether you need to update the PTE tax credit limit or not. I'll leave that for the accountants to decide. If we are to proceed further and calculate adjusted spousal support by iterating the credit limit amount, there are three things that need to be done. First, lock the unadjusted child support amount by selecting the User CS on the main toolbar. You'll note that when you select User CS on the toolbar, that the guideline amount is already saved as the User CS amount. Next, press the B key to change from unadjusted to adjusted nets. Thirdly, iterate the PTE tax credit limit amount by keying in the new state income tax due as the non-taxable income amount. And lastly, after 2 or 3 iterations, the tax due and the non-taxable amount will be the same. At this point, the spousal support amount is the adjusted spousal support. We are currently looking at implementing an easier input for the PTE tax in a future update to ex-spouse that will automate the previous steps so that users don't need to manually do any of the iterations. If you compare this case with DismaSter, be aware that if you use the 9.3% elective PTE payment field to calculate the PTE tax credit, DismaSter seems to be treating the credit as fully refundable, resulting in significant differences in support payments. However, you can get around this problem by entering the PTE tax payments as other specific CA adjustments to income, then viewing the state income tax on the Guideline Cash Flow tab while the setting is unadjusted nets. In DismaSter, the unadjusted net setting is the same as excluding spousal support in ex-spouse with regard to tax calculations, and then entering the smaller of state taxes and the PTE payment as other non-taxable income as in ex-spouse. After that, you would need to take the same steps as we have in ex-spouse by iterating the state income tax due and updating the other non-taxable income amount. So at the moment, neither program has a simple implementation of the PTE tax credit. Both require manual manipulation of the data to arrive at the correct credit and support amounts. Hopefully we can have this situation rectified in the next version of ex-spouse.